welcome back to the channel. Right now I have this chart of Nifty 50. Okay, wait. Hello. Yeah. So I have this chart, and the decision of selling all of my calls turned out to be really good. Just imagine that we all bought calls from these levels of almost 23,800, 23,900. I was even holding my calls when we made this low. This was our expiry on Tuesday, and then uh, okay, yeah. So pretty much over there, and okay. So just imagine that from 23,900 we rose all the way up to 24,500, and that's a rise of roughly 600 points, and then you get a flash crash like this, and then you just 600 points just wiped off in 2 days. So, and I must say that it was clearly a very, very wise decision, and I would like to give my exit strategy a 10 on 10, because I exited all of my calls over here, even, and I have also made a video where I have explained why I exited my calls over here. Around 24,467 was the current market price in Nifty. I'll attach a video of that, and yeah. So far so good, but our hypothesis has turned out to be extremely wrong, and now I don't really want to be extremely bullish on the market and forecast targets of 25,000, 26,000. It might come, but it might just take a lot of time, because just to be very frank, we have crossed below this trend line support, right? You cross below that, then there's a fair possibility of saying that you have completed a three wave correction. So I have no option of labeling this as wave X, and when you get this kind of wave X at the top, then you would not like to be extremely bullish at these levels, right? And you have also breached this level of 23,829. That just negates our entire view, and our hypothesis was turned to be wrong in this case. And it was just a matter of risk management, how you traded this, how you got out, and if you traded like me, then you would have kept most of your gains. And obviously these kinds of moves are couldn't be predicted well before advance, and these are uh, some of the moves that you need to be saved for. So risk management plays a really important part in your entire trading process. Right. So now what is my next analysis telling me? So that just tells me that when you do this rise, and if this is a counter trend rise, the next best thing um, to keep into mind is, if this is a counter trend rise, then the next level that you see in Nifty is obviously going to be around the start of this start of the leg, from where you started this entire rise, from the level which we went long. So that was almost 23,000. Does that mean that I expect the market to go right away to 23,000? No, but I think this is a very wide range of 24,500 and 500 on the upside to 23,000 on the downside. I'll give it a couple of days, maybe a week, to see what kind of action is there. And until and unless I don't see higher highs in the market, even on a 30-minute or an hourly chart, I'm not going to be bullish on the markets, because this is a pure resistance based selling, and which came out from the top end of the trading range, which was around 24,500 to 600 range. So now the expectation is, if this entire leg is wave W, and if this entire is wave W and this entire is wave X, then I would have to label the next move that is going to come on the downside as wave Y. And I expect wave Y to be at least similar in size as wave W. If not in size, then maybe time wise. So what, wave W took how much time? From 21st of April till, let's say, April, 21st of June, April, May, June. So 1.5 months was wave W, and this was from 10 June to 10 July. So 1 month of wave X. Then you probably might want to assume that you have another 1 month to 1.5 month of sideways correction, and uh, that uh, that sideways correction could be time wise correction, or it could just be price wise correction where you eventually see levels of 23,000. But this entire range of uh, of 24,000 to 23,000 uh, is going to be somewhat very difficult to trade, because this kind of market is going to just give you choppy moves. This was an impulsive move, and this was an impulsive move. The combination of two impulsive moves gave me a wave X. That is fine. I could trade this move. I could trade this move, but I can't trade what is going to come next in a couple of weeks. I can't trade this moves, right? It's very difficult to trade this move as the direction is completely missing. One day you could be down 200 points, next day you could be up 200 points, and then it would just bore you till death, and it would just have a very negative effect on your portfolio. So I think I'd wait a couple of weeks and see what really the market wants to do. But yeah, stocks wise, I think stocks are in a better place, and that is what doesn't uh, open up this possibility of we going below 23,000. Right now I'm just keeping into this possibility that we might just be headed towards 23,000 in a couple of weeks. That is not a bearish call, I'm just being a bit cautious. But I look at stocks and then I see that no, the stocks actually have made, many of the stocks have actually made higher highs. They have cut above their previous months and previous weeks highs. That just gives me a view that it could just be a time wise correction, who knows. So let's wait for a couple of weeks. Let's see what Nifty really wants to do. And obviously, you cross about 24,500, then you are open to this possibility of 26,000. But I am not really looking at this possibility currently, because frankly, what I expected is, if this is an impulsive move and this is a corrective, then I expected an impulsive, and I was of this view that after after this pause around 24,200 levels, you again start an impulsive move on the higher side, but that didn't really play out, right? So two impulsive moves have made this a counter trend bounce, and the next wave could be a wave Y that could make us go towards, who knows, 23,000 or even 23,500. So this entire range, let's wait for a couple of weeks to let things clear out, let Nifty do its own correction, and then we'll see what's in store for Nifty. Do we really go towards all-time high in a couple of months after completing this wave Y? Thank you.